Right.
I guess that wasn't
You
really
can't make them fast enough. You can't. And so there's a hit to gross margins, and that bothered people. But I also think that, David, when you have NVIDIA watch parties, a lot when you have, say, like in the Premier League, you have these teams that Wilf can talk about. I don't know, they're in strange British cities.
Yes.
What happens is that
There's a
well, there you go.
party.
That's a watch party.
What's
right? But no, and that is the correct takeaway, of course.
Thank you.
But I do think that plus the National NVIDIA Day and how the nation kind of stopped at a certain point.
Yep.
No, I mean, we have to go back to reality, which is that NVIDIA is a company and Jensen is a man. And they did have some product issues in terms of what I regard as just being, look, we didn't make as many as we'd like. But 2020...
But demand remains unabated, clearly. We've talked about, of course, the continued CapEx plans of all of the largest companies in the world.
45% of the business is them.
And data center revenues at $26.3 billion. Again, to put it in perspective, you're talking about what is 2.5 times what it was not even that long ago.
In the whisper, I was out with a prominent
April of 22.
semi-executive last night. He said, "Who makes these whispers?" And I said, short sellers who then give it to their compadres on the sell side so that the number's too high and they have to be $2 billion and they can't, so the stock gets rocked.
In conclusion, Jim Cramer underscores the critical role Nvidia plays in shaping the tech and AI landscape, particularly as the market awaits its upcoming earnings report. He points out that Nvidia's performance could significantly influence not only its own stock but the broader market as well. With concerns over the flow of money into tech stocks, investors are looking to Nvidia for leadership, especially as its AI capabilities become more scrutinized. If Nvidia delivers on expectations, it could further cement its position at the forefront of AI, but any disappointment in guidance could dampen the optimism around AI's immediate potential. Cramer also touches on the pressure Nvidia's CEO, Jensen Huang, faces, with his every move being analyzed by the market. He suggests that Nvidia's potential AI breakthroughs, though largely hidden from the public, could be revolutionary, changing the way we understand robotics and technology. The future of Nvidia, and its influence on the AI market, depends on how well the company meets these expectations. With that in mind, Nvidia's results could either accelerate or slow down the overall market's confidence in AI-driven growth. Do you believe Nvidia's upcoming earnings report will meet the market's high expectations? Or is the optimism around AI overblown? How much influence do you think Nvidia's leadership and potential AI breakthroughs have on the broader tech sector's performance?
On Nvidia, I don't know whether I shouldn't pay a little bit less than that for Salesforce, but Salesforce has got the momentum, and you know how much people love the momentum in a growth model.
They love
But last night, I just say last night was one of the most exciting nights we've ever had. Not that Jensen necessarily got it wrong, but the yields were very low.
Yep.
So in other words, like the first, like when
you know what? Actually, we have him talking about it on the conference call.
Oh,
let's take a listen to what he had to say, in particular about that ramping up of production of those new Blackwell chips.
The data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong, and the anticipation for Blackwell is incredible.
All right, so Stacy, all eyes on guidance, obviously, as it always is. So near 32 billion, near 32 billion in revenues is the guide, the expected guide. How much above that is needed to get what Josh would call a big plus reaction out of the stock?
Yeah. I think the buy side whispers are closer to 33, 34 billion, which would probably imply a 30 billion plus implied data center guide. If you figure the other businesses are a few $1 billion. So they had guided 28 billion for this quarter. The street's a little higher than that. They're 28.7 or 28.8. Street's around 31 and 31.8 something, close to 32 for next quarter. Buy side's probably looking 33 to 34.
Are you optimistic they're going to get to that?
Yeah, so this is the interesting thing, right? So everybody's been wondering what the Blackwell delays might mean for any of this. And I actually think for Q3, it's probably not much of an issue. There wasn't ever going to be a ton of Blackwell revenues in Q3 anyways. And they're not going to guide to Q4 and beyond. Maybe we'll get some color on that. I think there's still a ton of demand. They're still shipping everything that they can sell. I think that they've been able to backfill some of those, and it's a minor delay with Blackwell, but they've been able to backfill, I think most, if not all of it, with Hopper, H200 and the like. I think revenues probably should be fine. I think more around commentary what does this delay actually mean, if anything, as we go into the end of the year and the beginning of next year, as Blackwell was supposed to ramp? Are there any changes to the roadmap that might influence like that trajectory? What does it mean for gross margins? You know, if as they're maybe shifting the roadmap around. That's more qualitative commentary that we may get that may be important and may move the stock one way or the other. But like the revenue numbers, I actually think will probably be fine.
August was, of course, a volatile month for the Dow, S&P, and Nasdaq carving out gains, with the Dow and S&P hovering at fresh highs. So what will September bring for stocks as we get ready for a jobs report and possible Fed rate cuts? Joining us now, Fundstrat Global Advisors, Head of Research and CBC contributor Tom Lee. Tom, great to have you with us. Nasdaq, I should clarify, will only have gains if it continues its strong session today, so it won't be significant net gains. Tom, great to see you. Long time no speak. First and foremost, what's your reaction to how the market is processed Nvidia's numbers? It, of course, fell initially in the pre-market. Yesterday morning it was doing all right, and then it did close more meaningfully down by the end of the session yesterday.
Well, I think Nvidia is one of these stocks that has become part of like a stock market lore. Almost everyone has a position, and I don't think the results and the earnings changed anyone's minds about AI and the central role it's playing in both global productivity, but also Nvidia's role. But I think the sell-off tells you that a lot of good news was priced in. I think that's why the stock fell. It didn't take the broader market down. I think that was kind of a positive outcome, and I think it just shows you that there's room for a lot of rotation, and I think that it's revealing that small caps is one of the groups benefiting from that rotation.
Let's talk about that rotation, Tom, and the extent to which there's still a long way to go if you're looking at the valuations of some of those sectors that haven't done so well in recent months and years, or whether things have bounced enough across the board that you start to get a little bit concerned about valuations for the entire market, not just the Nvidias of this world.
Yeah, valuations are definitely something our clients are asking us about because, the equity markets have been rising for several years. But the idea of a rotation, I think, is grounded on a couple of things. One is that the Fed's rate path is lower, and that benefits cyclical stocks and small caps. And we know there's also a lot of cash on the sidelines, and investors de-risked because of the yen crisis and just general concerns about the summer. And so I think the Nvidia results plus the Fed in September is really the catalyst that is going to get some investors to actually follow through with the rotation.
Appropriate multiple for this company.
Okay, so let's say they're going to do it a calendar year. Let's say they do $5, calendar year 26.
EPS number.
Yes.
Correct.
So give it a 30 multiple.
All right.
Why not?
Why not?
Give it a 30 multiple, and you've got a stock that's down $30 now from where it will be. But now it's become a little more show me because we now realize that Jensen Huang, in the end, is fallible. We didn't think he was fallible. Now he is. So maybe some people feel like we can't give it that multiple. I don't think that's not a big tall order. Give it a 30 multiple on a $5 number? What the hell?
Yeah.
Why not?
Yeah.
But I think, David, we all were kind of surprised to hear that there were yield problems. We kind of felt that it was turnkey. We should never have thought it was turnkey.
It's not easy coming up with a new chip, and they were putting some.
One of the things that he emphasized over and over and over again is the return on investment is right.
Our panel at the ready: Stacey Rascon, Senior Analyst at Bernstein; Josh Brown, CEO of Ritholtz Wealth Management. He's owned shares for as long as I can remember. Stephanie Link of Hightower with us today too. Steph and Josh, CNBC contributors. All right, Josh, you get the first word because you're my guy on Nvidia. What do people need to know here?
I think the most interesting thing here is that despite the fact this market cap has grown to the size that it has, the volatility is still with us. That's usually not the case. Usually as companies become larger, we expect a maturation in their business, and as a result, we're less jumpy about the stock price from day to day. Nvidia is just a different thing entirely. It's its own self-contained casino in the stock and options market, and this report is no different. Nvidia is expected to move plus or minus 11% in reaction to the earnings tonight. For the last 8 quarters, the average implied move post earnings was plus or minus 12%. So the game is still the game. That's the first thing I would tell you. The second thing, expected earnings per share of 65 cents, just to set the table. That's 138% year-over-year gain on revenue of 28.7 billion, which is a 113% gain. If you look at the last reactions to earnings from 2023 through today, reactions were plus 14%, plus 24%, then we had a flat, then we had a minus 2%, which is inconceivable, but it happened. Then we had a plus 16, and then we had a 0. So really, the average reaction through last quarter, throughout 2023 and 24, is plus 10%. But as I've shown you, those results have really been sort of all over the map. We haven't had the big down reaction. That's the one thing we haven't seen yet since the Nvidia era began. I'm not suggesting tonight will be the start. Just keep in mind, it is in the realm of possibilities, even though we haven't seen it in this time frame.